From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, August 6th. You're listening to the HPS Macrocast. I'm Matt McDonald in for Tony Fratto this week. I'm joined as always by Brendan Walsh from Markets Policy Partners, and we're also joined this week by John Dick from CivicScience. It is Jobs Day Friday, so let's dig in and get into the new jobs numbers to kick it off. It was a good jobs report. The number for this is July's number, and the number was 943,000 jobs created. There were also upward revisions of 100,000 plus to the prior couple months. Notably, the unemployment rate went down by 0.5%. So that's at 5.4%, which is great. Under the hood, most of this stuff is all good. I would say you have increased participation, you have increase in wages. There's a little bit of seasonality, but I don't think anything to get worked up over. Coming into this, I would say with a weak ADP number, there were some maybe downside whispers. It wasn't quite clear. I think this kind of landed where most of the forecasts had it, but the ADP number, I think, had people wondering where this was going to land. What's your read on the report and the market's perspective on it, Brendan?
So the market is definitely taking it positive. I wouldn't. It's not necessarily a perfectly Goldilocks scenario because it actually was quite strong, but it's certainly not so strong that you would expect the Fed to change the guidance that they gave at their last meeting, which basically took off September as a meeting that they would begin the taper. That puts the taper at either the beginning of the taper discussion at the November or December meeting. This jobs number does not change that guidance. So for the market, that's very good. It also, though, reverses the large rally that we were seeing in yields, especially the 10-year yields. So it was called the bear steepener, where short end rates kind of stay where they are, but the long end rates start to go down. It's because the market is pricing in a very bearish outlook on the future. So we got down as low as 1.7 on the U.S. 10-year yield. Right now, we're up to 2.83. So that's good. You want rates to go up because growth is good. You don't want rates to go up because the Fed is behind the curve tightening. So this is a very good scenario where you can still have a dovish Fed. You can have slightly higher rates because that certainly helps, growth, and also within that group, cyclical companies, especially banks, are very much helped by higher rates. So we had seen a fairly large sell-off in the financial sector because if rates were going to be at 1.1% forever, it's not a great situation to be a bank. And then for equities, it's kind of a continued risk-on scenario where rates aren't too high to choke off growth. Earnings have been good, and now you have still a Fed that can remain somewhat cautious on the tightening side.
John, what's your take from the consumer side about how people are feeling about the economy? I mean, it is worth pointing out that the BLS, the way that they do this stuff this is obviously the jobs number. And so these figures of when they're in the field, they're kind of 3 weeks old now. Obviously, like there's increased chatter around Delta variant and that sort of stuff. If you go into the numbers, like we still continue to see a lot of job gains from hospitality and restaurants and that sort of stuff. But there's
even saw some wage gains in hospitality and restaurants, which is a good sign. They hired a lot of people, and those people actually were able to demand simply higher wages.
Yeah, I mean, look, if there's ever been a validator of our ESI, this is it, right? We've been sort of seeing significant gains in attitudes toward the job market for months, but really, really particularly like sort of mid-May through June. And this is, those chickens coming home to roost in a good way. And if you think about it, people are feeling the positivity of the job market before they get the job, right? I mean, you've got to interview, you've got to go through the process like that. Those things take we've all hired people before. It takes a month or more to do that, right? So of course there's going to be a lag between people feeling the frothiness of the job market and those job numbers showing up. So that's 100% positive. Although we are just in our ESI this week, we saw attitudes toward the job market start to plateau, not go down, just plateau. So, okay, maybe we've sort of hit critical mass on that thing. And, at the other end of the spectrum, we saw attitudes about the housing market plummeting over the last several months because, there's just a supply and demand problem that seems to have bottomed out. So these two extreme things going in opposite directions. What's in the middle, which you touched on, which is just general attitudes about the economy and our personal finances, those things are a little bit up and down right now. I mean, I would say tenuous is the word. And it's very Delta variant dependent. I mean, people are cautious about what's going to happen with return to school. That's making them cautious about what's back to school retail going to look like, which, by the way, is going to explode, but it doesn't matter in a good way. But yeah, I mean, it's definitely a mixed bag of when we look at sort of forward-looking metrics around attitudes toward personal finances and the job market, the fears around politics and COVID and now the Delta variant historically kind of supersede like the reality of our personal financial situation. And that's kind of where we are right now. I will say consumers are still sitting on piles and piles of cash to spend. We're seeing that in the auto market. The percentage of Americans who say they're in the market to buy a car in the next 90 days is as high as we've seen it in like a long time. That number hardly ever moves. So yeah, it's a weird mixed bag. It kind of depends on which angle you want to look at it from.
You also have I mean, it depends by state, but you also have the ending of the extra unemployment benefits coming up. I mean, it's kind of a strange time where we're looking at the jobs numbers. It's always in retrospect a month, but then you have the Delta variant and the discussions around that have really only shot up in the past, couple of weeks. And then you have as you point out, John, the back to school stuff that's going to have an impact. And then whatever the unemployment insurance situation looks like coming around the corner, there is like, I don't know, there's some weird bookends going on with how
and it runs off in early September. And we even got indications today that there's no appetite within the Democratic Party to extend those, basically because they need that money for the partisan reconciliation infrastructure bill. So the 300 is going to roll off no matter what.
Well, and don't forget the child tax credits just hit people's, mailboxes too, right?
We talked about it a couple of weeks ago. It's a very under the radar, very big stimulus.
Yeah. And you look at sort of where that money is going to go to things like back to school, right? For obvious reasons. I mean, of course it is. And so I think we're going to see a monster back to school season, regardless of whether kids are, regardless of whatever happens truly with return to school. 70% of Americans expect their kids to return to school in person. 10% are still on the fence about it, and 20% are going to do some mix of hybrid or continue to work school from home. Right.
I think it's a big risk to the Democratic Party in the midterm election. Many parents, this has become a one, issue voting. If my kids don't go back to school, my wife will never vote for another Democrat for the rest of her life.
It is interesting on the back to school and the rise of Delta and that sort of stuff. Is that I don't know. It feels like with the Delta variant is that it's obviously there's risk there, right? And there's lots of concern, but it also has this quality of kind of, it feels like this aspect of, okay, now we're going to have to learn to live with it. And how are we going to do that? As opposed to last year when it all hit at the beginning and it was like, oh, we got to shut things down to stop the spread. And it just has this quality of kind of, for one reason or another, we're not able to do that. And
I agree. And whether it's PTSD or whether it's, we did spend $7 trillion. So there are some vested interest in keeping COVID alive. But, here I've been in the Cape all summer and there was a big part. July 4th on Provincetown is a huge weekend. It's the perfect test case scenario if you wanted to test the vaccine against Delta. It's 60,000 people and 1 square mile and a huge party. this has been cited as a reason why we need to lock down. But the reality, the data shows it's the exact opposite. We had about 450 people got infected out of 60,000. Of those, 75% were vaccinated. So it is clear you can still get
of the 60,000 or of the 450?
No, of the 450 that got COVID, 75% were vaccinated. So it was a breakthrough event. Of those 450, 4 people that were vaccinated needed some hospitalization, 0 died.
Yeah.
This is a time to stand up and cheer and say it's time to go back to normal. The vaccines work. And we can't lock down a country because a certain part of the population refuses to get vaccinated. It's time to move on.
Well, something we're watching super closely is attitudes about like vaccine mandates, whether they're government or private sector.
And you've seen a lot of headlines every day.
Yeah, and most of what we ask about is around sort of business mandate. Like, should you have to have a vaccine to go to a restaurant? Should you have a vaccine to go to work? Should you have whether that mandate is being driven by the government or by the business itself? And look, the majority of Americans support it, but that also is generally the people who've been vaccinated support it.
Right.
You know? Yeah. But I look at that less in terms of like the absolute measure we have today. And I'm really fascinated to watch how that trend line evolves, because if this does, there's a lot of people that I think are still in denial that like this is anything more than a blip, right? We're going through right now. And like, why would we go to these extreme measures? It's just going to come, pass. But like, if this lags into the fall, you might start to see a louder chorus for these kinds of like, mandating measures, particularly when we start looking into like holiday season and things. So that's something we want to keep a real close eye on, because if people start to feel like the economy is getting hurt again because people can't go to restaurants or whatever, you're going to see support for more extreme measures. No question about it.
Yeah. Today, United announced they're mandating everybody be vaccinated.
Yeah.
Let's take a quick break and chat about this a little bit more when we come back. This is the HPS Macrocast.
Every 2 weeks, HPS measures U.S. adults' feelings and expectations for the economy. The HPS CivicScience Economic Sentiment Index accurately measures movements in overall national economic sentiment and provides a more sophisticated alternative to existing economic sentiment indices. To learn more, contact us through HamiltonPlaceStrategies.com.
All right, we're back at the HPS Macrocast. I'm Matt McDonald with Brendan Walsh and John Dick. We've been chatting a little bit about the Delta variant, which has cropped up in the past few weeks. I mean, it's been around for a while, but in the past few weeks, people have been chattering about it a little bit more. It definitely feels like the markets are, I would say, not concerned about the material impact that it's going to have in terms of the economy or the markets going forward. It just feels like a very different conversation than when COVID initially came around. What's your read on that, Brendan?
Yeah, you have days where the market goes down and people kind of blame it on the Delta variant. But the reality is the equity markets are at, fairly close to all-time highs. The bond market might have priced in Delta more, but the bond market rally, the drop in yields had started, and we've been doing this for 3 months. So that was just a trend that it was maybe helped by the Delta variant. But now today, after a pretty good jobs number, we're back to 10 basis points above where we were. So I think that it's on some radars, but it's not being priced in like it's a long-term danger. We have some supply chain disruptions, especially in shipping, things like that. Which
I was going to ask if there's any difference in how people are thinking about that from a global perspective, because it does feel like some of the Pacific Rim countries that had much more aggressive like lockdown strategy of zero tolerance, it feels like they're having some trouble maintaining that. And I just wonder
that's where it's being priced into markets. The U.S. market is kind of saying we're going to be okay. U.S. companies that are exposed to, especially Asia. So China, last week announced targeted stimulus measures because they are having to locked down, and it is having a slowing effect on the economy. A lot of private sector economists have taken down their estimates of growth from the 6.1 that the Communist Party said it was going to be to, as low as 5.1%. And you're also seeing in places like Australia, New Zealand, but even more importantly, a place like Thailand and Vietnam really didn't have large outbreaks last year, and they're on lockdown right now. So I suppose one good thing about the Delta variant is it's so infectious that you get a quick wave. Unfortunately, within that wave, lots of people die.
John, what's your take on how, related to that, it feels like there's been an uptake in the conversation around vaccines, vaccine administration policy, that sort of stuff. How has the Delta variant changed how people are thinking about those issues?
I mean, some people, there's just this calcified, 20% that's not going to move on anything, right? It doesn't matter who tells them at this point, because you've got Mitch McConnell and even Ron DeSantis, you've got these people out there saying, go get vaccinated. And they're like, no, I already made up my mind. I don't care what you have to say, right? They're listening to whatever outlier they can point to who sort of validates what they already think. I mean, that's the nature of political tribalism today, such as it is. I mean, and what's that going to do? Like that's going to create some regionality to the way this plays out, right? And I mean, state by state, region by region, where, people are going to ignore the rules or lean into the rules, depending on where they're located. I mean, I don't think we're going to see, I know, Brendan, you're saying we're not going to see like shutdowns and things again, which is true. But like there are certain areas where people, like restaurants, right? I worry about restaurants when the weather starts to turn cold again if we're not past this, right? Right now, people can still go out to eat and eat outside, but things that we've learned is that like if the cautious person in an urban center is going to be extra cautious, and that could really hurt these, restaurants that are already tenuously recovering. So that stuff. But
I think you're totally right, because the focus right now is on the government policy response. I think we're beyond that. The government knows they can't really enforce it, so we're not going to do it. What I think is going to decide how it goes for the future is the consumer response, how scared they are, but more importantly, the private sector response. Restaurants are going to demand vaccination. Companies, I know there's a law in Missouri where if you're vaccinated and you get COVID, they'll pay you while you're sick if you're out. If you get COVID and you're not vaccinated, you're fired. So you're seeing a private sector response to this. And I think that is in the end going to be the most powerful response to the vaccination issue.
And what about when health insurance and insurance companies start playing that game, right? And either incentivizing or punishing, right?
Punishing, and even more so, exactly.
Now, the thing with like the restaurants,
because that will happen with healthcare. That's what they do.
And here's why I think like a market-driven rules and regulations, or whatever you want to call them, is the best way for this to play out. Because if I'm a business, you just nailed it, Brennan. We've been saying this from the beginning. The recovery, this entire crisis, is dictated more by the consumer than by government or business or anybody, right? Now, if I'm an urban restaurant, and I know that my customer base is going to be particularly more cautious, but also much more likely to have been vaccinated, right? Like that's the irony here, is that the person who's vaccinated is also the person who's going to continue to be the most cautious, right? So if I'm in an urban area and I create a vaccine mandate for my customers, that's great, because most of my customers aren't unvaccinated anyway.
Right now, like Danny Meyer. Right. Danny Meyer's demanding it. Yeah. But he can do it because he's in urban area,
that's his customer.
Areas. Exactly.
But if you're in a rural part of the South or the Midwest, and you forego any sort of mandates, it doesn't matter, because your customer is going to come into the restaurant anyway, right? Because they weren't the ones masking up. So I mean,
but if you're a manufacturing company in an area that is unvaccinated and outbreaks keep happening, which affect your productivity, you're going to demand the vaccine.
Absolutely. Well,
it's comical to think back to the beginning of the year when it was this big debate about who deserves to be first in line and all this sort of stuff. And now we're literally trying to pay people like lotteries and hey, can I get a college scholarship? Like, what a whiplash effect on policy on this stuff.
Yeah. And when people, whether the vaccine is safe or not, the very simple thing that I looked at is very rich, smart people were doing everything they could to cut the line. That probably tells you everything you need to know.
That's one way to outsource your decision making easily, right? I know it is interesting. This is going to be the crisis that launches 1,000 economics PhDs, but it is fascinating to think back to what the vaccine distribution policy could have been over the past year and whether that could have made any difference or not. I'm not sure that it would or wouldn't, but there's the behavioral side of all this stuff and the different messaging that's come out and all the rest of it is it's just really fascinating.
Yeah, like Connecticut, they just went by age, and the governor said there's just too many loopholes when you start to, okay, this person get it, that person get it, and they had one of the best distribution timelines on it. So sometimes it's, keep it simple, stupid.
Yeah, it just kind of it's interesting. I mean, it doesn't feel. I'm not sure that that if you're not vaccinated at this point, what could have been done in the past to convince you to be vaccinated. And I don't, maybe when FDA grants full authorization instead of emergency use, I don't know, for people who are in the weeds, maybe that'll make a difference. I guess we'll see.
Well, that is somewhat interesting.
September, right?
Well, within the military, they can't mandate it until it has the full approval, which,
right. So
that is a lot of people that, the military, a lot of it, it's only 50% vaccinated.
Yeah, it's not, I mean, listen, I don't know, that's not, it's odd to me that if the emergency use is good enough to administer 100 million doses or whatever, we're kind of over that, right?
But there is a legal, process, having the full approval does have legal implications in terms of what you can demand of people. Like demanding it in public schools, I think that has a big role too.
Yeah. Let's take one more break and then we'll come back and chat what's ahead for the next week.
Markets Policy Partners provides sophisticated financial market analysis that is independent, accessible, and actionable for a broad audience. Learn more at marketspolicy.com or visit them on Twitter at marketspolicy.
All right, we're back on the HPS Macrocast. Brendan, what do we have coming up in the week to come?
So the big thing is the Senate still hasn't passed the infrastructure bill. We had hoped, Leader Schumer was hoping to do it on Thursday, but there's a provision within the bill that kind of went below the radar. Senator Portman put it in there that it was going to tax. It put a pretty broad definition of what a broker is of anybody buying or selling any crypto asset. And with that transaction, they were going to tax it. They still plan to tax it, but the crypto industry was able to get enough people on their side to hold it up to try to limit what the definition of a broker is.
That's the one thing that is holding up the...
That's the one thing. So we now have competing amendments with Wyden, Toomey, and Loomis. On the one side, it's trying to put a fairly narrow definition of what a broker is, where Portman, Warner, and Sinema have a little broader one that would be more negative to Bitcoin and Ethereum. So we got to decide. And the White House actually kind of surprisingly came out on side of they weighed in on the issue and said they'd support the Portman amendment. So that delays things a little bit, but hopefully we can pass it this week. And then we throw it over to the House, where they only have a 3-vote. They only lose 3 votes. And it seems like Pelosi also, this then begins the reconciliation process for $3.5 trillion debate. And Pelosi kind of wants to put the two together. So the timing exactly, I think we get both of these bills, but the timing is very uncertain to me.
It's worth anchoring on the margin in the House because we're all used
so
to
underreported and underanalyzed.
We're also used to the Senate both being, it's typically a few vote margin in any given year, and you also have the filibuster, which creates another kind of boundary for legislation, and the House usually doesn't work that way. But with a 3-vote margin, a caucus of 5 people can hold stuff up. And so it's just,
and
I don't
the
know.
Democrats aren't even on the same page about the reconciliation bill. They're really far apart, actually.
You've seen a lot of kind of grumble, especially on the progressive left, about some of this stuff and making sure everything's tied together and all the rest of it. It's not clear to me where all that stuff lands. But
yeah,
it's
because then that bill also has to pass the Senate, which has 2 senators that can block it if it's too expensive.
That's right.
And then on the data front, we have the CPI, so inflation numbers, which is becoming a little less of a issue. 3 months ago, it's all we talked about. Senator Manchin, though, is trying to bring it back and sent out a tweet criticizing the Fed that they need to begin tightening. I mean, I think it's a good idea. I always take my monetary policy advice from rural senators.
It will, yeah. I mean, listen, like if it continues to confirm supply chain issues as opposed to something more structural, like
exactly,
it's probably where that lands. But
I do think that the core of the FOMC is strong, and they've given the guidance that we'll start raising. Actually, Vice Chair Clarida in a speech yesterday said that 2023 seems like a good time that we could start. That's exactly what's priced into the market. That's been the guidance that's been given by the Fed. They plan to begin the taper discussions later this year, which then puts the actual taper at like say a March timeframe. So the market knows what's coming, and now we just need the economy to still hold in there and not fall off a cliff.
Well, as long as everybody's giving us stuff to talk about, that's really what's important. So
yeah.
So tune in next week. Thanks to everybody for listening to the HPS Macrocast. I'm Matt McDonald with Hamilton Place Strategies. Thanks to Brendan Walsh of Markets Policy Partners and John Dick from CivicScience. Have a great weekend, everybody.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.